It is 2 a.m. on a Thursday in November. You are awake because the wind woke you. You hear it before you see it, a sound like a freight train passing directly overhead. And then, the ceiling in your bedroom is not there anymore. A tree, 60 feet tall, through your roof. The damage assessment comes 3 days later. $74,000. Structural. Roof, 2 walls, the master bedroom, part of the kitchen ceiling. You call your insurance company. You have been paying them $1,847 a year for 11 years. You have never filed a claim. You are certain this is exactly what insurance is for. The adjuster calls back on day 6. The claim is partially denied. The tree was diseased. You did not maintain it. That is a negligence exclusion. Your payout? $18,400 on a $74,000 repair.
Homeowners insurance is the policy that most Americans buy without reading. They sign at closing, set it on autopay, and assume they are covered. Most of them are wrong. Not about having a policy, but about what it actually protects. The average homeowner's claim in the United States is $13,000. The average payout on a disputed claim is less than 60% of the damage assessed. The gap between those two numbers is what this video is about.
By the end, you will know exactly what your policy covers, what it does not, what the insurance company will never tell you up front, and how to pick the right coverage so that the next storm does not cost you everything you have built.
A standard homeowner's policy, what the industry calls an HO3, covers 4 things. Knowing all 4 is the difference between being protected and being the person on the phone with an adjuster who just denied your claim.
First, dwelling coverage. This is the structure of your home itself. The walls, roof, floors, built-in appliances. The critical word here is rebuild, not market value. A house worth $400,000 on the market might cost $620,000 to rebuild from scratch with today's labor and material costs. If your dwelling coverage is set at $400,000, you are underinsured by $220,000. Second, personal property coverage. Everything inside the house. Furniture, electronics, clothing, appliances. Standard policies cover this at 50 to 70% of your dwelling coverage. The catch? Most policies reimburse at actual cash value, what your 10-year-old laptop is worth today, not what it costs to replace it. Third, liability coverage. If someone falls on your property and sues you, liability covers legal costs and damages. Standard policies include $100,000 to $300,000. In a country where a single lawsuit can exceed $1 million, this number deserves more attention. Fourth, loss of use. If your home becomes uninhabitable, this covers your hotel and living expenses. Standard coverage is 20% of your dwelling limit. On a $400,000 policy, that is $80,000 for temporary housing. At $200 a night, that is 400 nights. Enough for a full rebuild. Here is what your policy almost certainly does not cover. These are not edge cases. Every one of these exclusions is responsible for thousands of denied claims every year. Flood damage. Standard homeowners insurance does not cover flooding. Not from a river, not from a storm surge, not from a backed up sewer.
The average flood claim is $52,000. The average homeowner in a moderate risk zone pays $700 to $900 a year to cover it. Most do not have it. Earthquake damage. Excluded in every standard policy. In California, Washington, Oregon, and Alaska, fewer than 15% of homeowners carry earthquake coverage. Mold. Average mold remediation, $15,000 to $30,000. Sewer backup. Requires a specific rider, usually $50 to $100 a year, that most agents never mention. Home business liability. If you run a business from home and a client is injured, your standard liability does not cover it. Negligence, which brings us back to the tree. If damage results from something you knew about and did not fix, a dead tree, a rotting deck, a roof you were warned needed replacing, insurers will argue negligence and deny or reduce the claim. The insurer's definition of negligence is broader than most homeowners expect. Step 1. Get the dwelling coverage right. Call your insurer. Ask for a replacement cost estimator. Set your dwelling coverage at rebuild cost, not purchase price. Then, add an extended replacement cost rider. This adds a 25 to 50% buffer above your stated limit. It costs roughly $30 to $60 a year and has paid for itself in every major disaster area in the last decade. Step 2. Switch to replacement cost value for personal property. The upgrade typically costs $20 to $40 more per year. Step 3. Raise your liability limit to $300,000 to $500,000. Then consider a personal umbrella policy at $1 million coverage for roughly $150 to $200 a year. Step 4. Add the riders your standard policy is missing. Flood, sewer backup for $50 to $100, scheduled personal property for high-value items. But here is the thing nobody tells you before you buy the policy, and almost nobody tells you before you file a claim. Filing a homeowner's claim is not free, even when the claim is approved. The moment you file a claim, any claim, your insurer flags your account. 2 or more claims in 5 years can cause your insurer to non-renew your policy. In 2024 alone, over 2 million homeowners in California, Florida, Louisiana, and Texas received non-renewal notices. Homeowners who had been with the same insurer for 20 years received letters giving them 60 days to find new coverage. The general rule among insurance professionals: do not file claims under twice your deductible. If your deductible is $2,500, a $4,000 repair may be better paid out of pocket. So what do you actually do next? 4 questions that tell you where you stand. Question 1. Do you know your home's current rebuild cost, not its market value? If not, call your insurer this week and ask for a replacement cost estimate. Construction costs have risen more than 40% since 2020. If your home was purchased more than 3 years ago, there is a strong chance you are underinsured. Question 2. Is your personal property covered at replacement cost value or actual cash value? If ACV, upgrade to replacement cost value at your next renewal. The cost difference is typically $20 to $40 per year. The difference in payout can be thousands on a single major claim. Question 3. Is your home in or near a flood zone, wildfire area, or hurricane coast? If yes, you need a separate policy. Many policies have a 30-day waiting period before they take effect. Do not wait for a named storm to start looking. Question 4. Have you compared quotes from at least 3 insurers in the last 2 years? Homeowners' premiums have risen an average of 19% year over year since 2022. The average homeowner saves $400 to $700 a year by switching. The coverage levels are the same. The premiums are not.
Go back to that Thursday in November. The tree, the roof, the adjuster on day 6. With the right policy in place, dwelling at rebuild cost, extended replacement cost rider, sewer backup rider, and a documented maintenance record for every tree on the property, the outcome is different. The $74,000 repair is covered. The negligence argument does not hold because you have proof of a professional arborist inspection 12 months prior. The claim is approved in full. Your home is the largest financial asset most people will ever own. The coverage gap between a standard policy and the right policy costs roughly $200 to $400 more annually. That gap, unaddressed, is the difference between a $74,000 claim fully paid and an $18,400 partial payout on a disaster that was completely covered, until the fine print said otherwise.